Welcome to Basics of Forex, Part 4. Today we are going to talk about the different types of analysis in the financial markets. First off, we have technical analysis, which is also the most famous type of analysis of the three. Then we have fundamental analysis, and finally we have market sentiment analysis, which is the lesser known of the three and can be confusing for some. Let's start off with technical analysis. Technical analysis is examining past and present price movements to predict the probability of future price movements of an asset in the financial markets. This includes price rhythm, flow, and trends. Technical analysts believe all available information is already reflected in the charts, so they look for repeating patterns and trends. There's multiple different strategies to trade technical analysis in the financial markets, but we've listed out a few for you. First is price action, which is also the core of technical analysis. This includes support resistance, supply demand, and market structure. Then you have indicators such as RSI or Relative Strength Index, moving averages, parabolic SAR, and more. And I'm sure you've heard of Fibonacci retracement. For the sake of simplicity, we're only going to focus on price action in this series. Now let's move over to fundamental analysis. Fundamental analysis is essentially using a country's economic, social, and political conditions to evaluate its assets, current and future value. This includes interest rates, inflation, GDP, employment, monetary policies, and more. There's multiple different strategies to trade fundamental analysis as well, but I've listed out a few steps that might be helpful to you. The first is to identify key fundamentals coming out in that week, such as interest rates, any monetary policy statements, any speeches coming out, or any important data coming out during the week. The next step is to identify the market session that you want to trade in. Fundamentals coming out in a volatile session, like the London and New York overlap, is going to have a greater impact than fundamentals coming out in the Asian session. Then you want to evaluate proper risk management, and finally pair the fundamentals with technical analysis and market sentiment analysis to find your trades. Now let's move into what exactly is market sentiment analysis. This can be confusing for some, so we'll try to make it as easy as possible for you to understand. Market sentiment analysis is a combination of views, opinions, ideas, and analyses of different market participants. It's created by fundamentals, but it's reflected in technical analysis. Let's review some different strategies to trade market sentiment analysis. Market sentiment analysis is actually created from a fundamental perspective because of current economic conditions and what is the economic outlook. From a technical perspective, optimism in the market sentiment analysis is going to create bullish momentum, fear, bearish, uncertainty, consolidation. So we just took a look at the three different types of analyses in the financial markets. Each of them are equally important, so you should think of them like three legs of a stool.